Good morning, everyone. Welcome to Live Trading Action by InTheMoneyStocks. Today is November 16, 2016. My name is Nick Santiago. Thank you all for tuning in today. All right, today I'm going to address an ETF that you all probably heard of and many of you probably have invested in. It's called the Emerging Markets ETF. It's made by iShares. And what you're going to see here is that ever since Donald Trump won the election here, this stock or this ETF has been plunging, and right now we went from a high of 37.5 all the way down to around 34. Market has caught a little bit of a bid here, but ultimately I do believe that this is headed lower on the charts. So the real question is, where is this going and when can it be traded? We could look at all the news in between. You could see all the problems going on in China. You could see all of the currency wars that may be getting waged. You could see the strength in the U.S. dollar. But the reality of it is, who cares about any of that? Where can we own this and where can we buy it? And is it a good buy at some point? And the answer is yes, yes, and yes. But we want to look toward a weekly chart, and that will give us our answer where to get in. And a couple things you want to notice. In 2016, we put a low in January, and then the emerging markets at that time was trading around $27.61 on the EEM. We went all the way up to around $38. That's where the emerging markets ETF failed, could not go any higher, and now you see it coming down into this 50-week moving average. So this is why we're getting a little bit of a bounce this week, but ultimately I do think that we're going to go through that level and we're going to trade lower. But here's where you want to get involved. Right here around $32. So anywhere 32, 32 and a quarter, somewhere there, that's your level to get into the emerging markets ETF, the EEM. And let me just show you a few different things here why I say this is a good level. For one, you're going to see that this broke out, came up here, pulled back right into 32. Next, it tried to break out again, failed, came down to 32. But when it got down to 32, this is where it finally broke out, and it went up all the way to 38 bucks. That tells us you have a lot of institution participation, a lot of institutional support right around this $32 level. So this is where you're going to want to get into this equity when and should it come down there. And I do believe it will get down there very, very soon. So again, keep that on the radar. 32 is your spot. That's where you could look for a nice bounce in this equity, possibly going back to around $37. I don't think it goes much higher than that, but nonetheless, it could be a nice trade. And anytime you could take a trade and put a stop right below 31.70 on a weekly chart close, that's a really, really good risk reward if you could potentially make 5 points on the move. So again, keep this on the radar. This is something that I will be trading. You can follow me just simply by following the Research Center. And if you have not tried the Research Center, come on over and do so. Take a 7-day free trial to it. You get all of our chart setups. You'll get all of our cycle work. You get all of our content. You'll also receive our No Hype Live broadcasts, which allow members to come in, ask us questions about the market and anything market related. And we do that twice a week on Thursdays and Sundays. So with that being said, everybody, I'm going to leave it there, short and sweet. Have a great trading day, and we will see you on the charts.